Okay. testing, 1, 2, 3. Kumatelevu, how are you? Good morning. It's a Monday. Which means the market's been open well over 12 hours already, and I'm already exhausted. So anywho, are you guys ready? Who's live? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance so we can lower our risk. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Hello, my name is Wayne. I got the answer to all your questions. It's the economy, stupid. Actually, that's all. I don't know if you can see it inside. It's the economy. That's all. Anyways. So thank you for doing the poll. If a few more people could vote on the poll, that'd be great. So we got a busy week. We got the banking crisis. Then we have FOMC. We have Bank of England. A whole slew of interesting things going on. So thank you for being part of the community and a subscriber. I appreciate you. We're like peas and carrots. So ask questions. Let me know how we can help. We'll go through the charts. I'll answer your questions as best I can. In regards to what in the world is going on, Waldo? Or is it Carmen Electra? No, Carmen San Diego. Although Carmen Electra would be fun. So there you go. So if you look in the description below, there's lots of resources that will help you. One of them is a link to my book, Strategic and Tactical Forex Trading. Another one was to my fundamental, I don't like calling it alert service, a new fundamental analysis tool called QuantBox. There's a link there. In fact, there might even be a link to a webinar we did recently. Third one is FX Bootcamp, where you can get 88 hours of training videos for $88 a year. Yeah. Yep. So you'll have a whole year to go through them. And, every so often I add more. Most of the training courses are about 12 hours each. So they're legit. They're not silly little kind of, videos. I don't know. I'm telling you, it's legit. You're going to like it. And there's also a link to tradersway.com, a trustworthy, ethical foreign exchange boutique brokerage firm. Fast execution speed, narrow spreads, huge swaps, But ultimately, I trust them. They earn my loyalty and respect. Yeah, in particular, when the market was shocked by a central bank, they were absolutely totally fine, which told me that they actually execute their business model the way they promised the market. And other huge brokerage firms went out of business because they weren't. So anyways, thank you, Traders Way. We'll go over here. Yeah, boy. All right, let's see. Can I get a few more people to do the poll? I'll leave that for a while till that gets done. By the way, and I'll create the sign up today. I think it's going to be Tuesday next week. Wait, Tuesdays are busy. I can't do it Wednesday. Maybe Monday. It might have to be Monday next week. So 1 week from now, I'll do a quarterly outlook. Many people have requested I do another quarterly outlook. So I will. So look forward to receiving an email about the sign-up link where we plan the next 3 months in advance. There will be a fee. It will cost $11. So I just have to create the link, and then I got to get to work this week. It's a busy week, but I will get to work on that. And the interesting thing is the fundamentals are like crazy right now. So, yeah. So, even I'm looking forward to, it. Yeah, because with the banking situation right now, all the fundamentals may have changed. So, yeah. So I'll let you know. So today the dollar is weak. Okay. Yen is strong. Swiss franc is weak. So let's just assume nobody has followed anything this weekend. Oh. So on Sunday, I spent hours. That's why I'm tired. Spent hours watching the press conference with the Swiss National Bank, the finance minister of Switzerland, FINMA representatives, and it had to do with the takeover of Credit Suisse by Union Bank of Switzerland. It's quite a deal. Union Bank of Switzerland bought it for $3.2 billion, bought Credit Suisse. But they also got a $100 billion loan, and I think another $9 billion from somewhere else. That's really strange. So you're like, all right. Then what? Well, it's a takeover, not a bailout. So the shareholders are the ones that are supposed to take a haircut, which they are. And by the way, I own Credit Suisse. I'm a shareholder of Credit Suisse, which means I'm now going to be a shareholder of Union Bank of Switzerland. So I will get some UBS shares from my CS shares, and at a lower value, I'm sure. But here's the thing. During the sovereign debt crisis and the crisis after that one, there was some sort of European crisis again, and what was it, 2014? But anyways, there was some facility, and I can't even tell you much about it, but there was a facility in which the ECB and how do I explain this? They issued bonds to shore up banks in the case of a crisis. And to lure the money in, they paid a pretty high yield, especially at that time. And some people took these bonds. I think $19 billion worth of these bonds were issued against Credit Suisse. And the only way you'd lose money is if Credit Suisse went out of business. Now people are crying foul because Credit Suisse went out of business. And they're like, but I lost all my money in the bond. Well, that's why I paid a high yield, bro. But anyway, so now, but here's the interesting thing. In the capital structure of any corporation, okay, what happens is the shareholders, the people that own stock, they own part of the company. So if the company goes to zero, they lose everything. But whatever money is left over and what buildings are still owned and whatever assets are still on the balance sheet, they get sold off. And then all that money does not go to the shareholders. It goes to the bondholders. But in this weird situation, because of, again, government intervention 10 years ago, those particular bondholders are going to lose everything. And the equity owners like myself will get something. And it's usually the other way around. But I'm like, well, people cry foul, but I'm like, they bought those bonds with those terms. So anyways, so it's weird. Like, people are like, it's weird. That's not how it's supposed to happen. Well, it's what you signed up for. So anyways, a very interesting weekend. I also was watching Australian news as Australia was opening up. I was getting Australia's reaction to the situation. So I thought that was kind of funny, or fun. But complicated world, y'all. And the fundamentals are getting more and more complicated. So I'm looking forward to seeing how the markets react to everything. All right, so let's take a look at the poll to see what's on your mind. So you guys are mostly worried about central banks. Okay. Not many about commercial banks, and a little bit about stocks and a little bit about bonds. Well, you know, they're all very much related. For example, I guess I probably have QuantBox open somewhere. I do. We'll go there. Oh, and I'm on the correct page. So yields are changing rapidly. Let me just refresh this page. I've had it open for days. Days, I tell you. Okay. Let it load. But yields are changing dramatically. Yeah, and it's even struggling here because of the, I don't know why it's struggling. Let's see if I refresh it one more time. But what I'm trying to get to here is the bond market is freaking out. And I'll have to find if this isn't, yeah, see, it's just the rate in which it's dropped signifies it's going to zero if you calculate it. And it's incredibly rare and unusual. Now, that's not what's actually happening, but the math of it is freaking everything out. Okay. So at the beginning of the month, the 10-year T-note was paying over 4%. Okay. And it's falling very, very quickly. Try to get a number a different way. The 10-year T-note is down 5.3%. That's what I'm trying to get at. That's why, like, the other projection. So remember the part of the last chart I just showed you on QuantBox, it just kind of drops off into infinity. Like it's going to go from 3.4 to 0. It's because it's calculating the rate of change and projecting. If it keeps falling that fast, in the next week, it'll be close to 0. Well, we know it's not going to be that fast, or we assume, but we were just at 4.7 on the 10-year, and now it's 3.4. Oh, my God. And other parts of the yield curve, you know, the different, if you do a term structure analysis of it, the yield is just radically changed on the front end. Just radical. It's just crazy. So the bond market's freaking out for sure. And a consequence of that is dollars weak versus gold. Okay, so gold is way up. So what's going on? Investors are buying gold and investors are buying 10-year, the 10-year T-note. They're buying bonds. You're like, Wayne, I don't get it. Well, when you buy a treasury, you push the yield down, and this is the yield, not the price, the yield. So you got to look at this. Money is flowing dramatically into the bond market and into the gold market. Okay. Dollar weak, dollar weak, dollar weak, dollar weak. Okay. So anyways, gold is the biggest mover and oil's dropping precipitously. We're now at 66, but I think we were at 65 earlier. So maybe holding up there. But all this is calculated real time, what you're looking at. Okay. So anyways, Drama City. Okay. A very dramatic change. So projecting negative 47. I mean, look, obviously it's not correct, but I want you to think about that. The rate of change that's been happening, if it continues at this pace, in 1 week, the yield on the 10-year T-note will be negative. Now, clearly that's not going to happen, but it just shows you how dramatic the rate of change is. Cool, huh? Cool beans. So anyways, US Dilly D, super weak. Money going into the bond market like cray-cray. So where is the money coming from? And one could surmise the money is coming from the stock market. So there's two plans of attack. If you're a bear, you're going to take it down like that. And if you are a bull, you probably were, I don't know, it's a little trickier on this one, but let me try to grab one. Maybe from here to here, you were thinking that way. Now, it would have gone way outside. Now, what is this? This is a standard deviation. Let's do a different one. I think I'd rather do a linear regression if I was studying this. So let me do the same thing now. Boom, boom, boom. It's not terribly different, but so anyways, if you're a bull, you're going to try to stay inside this channel. I'm not really a bull, but we'll see. I think it'll get interesting what the bank stocks do today. But I favor a move like this if I were me. Okay. What do you guys think? Smell like a plan? Leave it behind. You got to leave it behind. Now, Nazi took a rally last week, which is interesting. And the only thing that would signal to me is a rate cut. Huh? We'll talk about that next week. But this is NASDAQ, and it's going up. You can have it if you want. I don't want NASDAQ. I don't want it. You can have it. Australian stock market still following our channel. Sell zone, buy zone, sell zone, buy zone, and there's a sell zone, and you know we're just continuing mission. Notice we're already through the projected March low. Holy smokes. Codename Ren says, wouldn't a rate cut be economic suicide, only delaying the bigger crash? There's a lot of hyperbole in your sentencing. So, no, I would say no. I mean, economic suicide, delaying a bigger crash? To that statement, no. Could it create other less dramatic problems? Could there be less dramatic challenges to the process? Yeah, maybe. But again, I want to, before I get into deep comment, I want to focus not on my opinion, but on research. So over the next 7 days, I will do research and then I'll present something on Monday. So make sure you attend that. But yeah. All right. So anyways, we're through the monthly target, which is just really something else. Just amazing, right? Like with all the charts on the, that I'm displaying here going back several months, this is a normal month. This one's outside, but back in, and then a normal month, and then again outside. So some pretty dramatic moves. But notice you generally don't spend much time outside the normal range, right? So this went up until it stopped. So now we're down here. Be interesting if we go back that way, and that would be risk on. Okay, maybe we're going to get there. But we're not there yet. Commodities, if dollar is weakening, many commodities should rally. Oil, okay, yeah, you can see we were down at 64, and now we're at 66. Wow, what a day. Out of these, the first one I'd probably pick on if with dollar weakness is gold. Now we're pretty close to that 2,000. In fact, we hit it looks like. Remember, we talked about this like at the bottom. In fact, I think so. Remember, I used to short this. I was showing you carry trading. And I was using, I think, Mexican peso to hedge it. And then I got out at that X at the bottom. I'll circle it. So I stopped selling there. And I took profit, in fact, on this move. And I was in this trade and got profit there. And then, holy smokes, right? Holy smokes. I think I wanted to sell up here knowing it was a little bit risky and never got the entry. I think we had that plan somewhere. But nonetheless, this is pretty standard. If you're a bull, okay, that projects you up into this area. And we marked 2,000 multiple times. But notice the X that actually took me out was the announcement of Silicon Valley Bank going out of business. Remember, it happened on Friday. So what I was saying with the day trading group last night is that, that's not just a technical move. That there's rationale behind this. Okay. There's rationale behind this. And so, but I still find it difficult to trade it up here. Okay. But if it's fundamental, then it'll last for months, maybe years. So I don't have to be aggressive on my in. I need to be aggressive on my patience. Okay. My WTI. Okay, there's the 1 hour. I'm going to change this. Okay. Doesn't look bullish to me. Oh, is that right, Hope? Very cool. Let me go back and look at that one. At 1840. Yeah, cool. I don't really see an entry on this time frame, so I'm not sure how you got into it. But well played. Right on. Good for you. Yeah, I don't see how you would have gotten into it. I don't see any pullbacks, but again, maybe not on that time frame. Yeah, I don't have a problem with the price. I just don't see the entry. I don't know how you ended up buying it, but cool. Glad you're in it. Yeah. Well, what I suppose you did hope, if you don't mind me poking at it, you probably had a limit order to buy high. I guess it's actually a stop order to buy above the market. And I typically use a limit order below the market. So that's probably a difference in entry style. But look, you're in it. You did the right thing. That's probably where I got out. I got out of my short, I think, around there. I can't quite, I don't remember the numbers, but that's where I stopped shorting. So anyways, but here's the thing. When you do short term, and this is to everybody now, when you do short term trading, let's say hour, 15 minute, 5 minute. Okay. So in particular, the 15-minute, 5-minute chart trading people, which I used to get in, but I don't trade a 5-minute chart. I only enter on a 5-minute chart. You see the difference? So those that trade on a 5-minute chart and a 15-minute chart exclusively, what ends up happening is not only do you need to buy and sell at the right price, but you have to buy and sell at the exact right time as well. Your timing and your pricing has to be extraordinarily accurate. Where on a bigger trade, like Hope's trade, for example, the entry is important, but a lot less important because you plan on being in it for, days, if not weeks. And the window of error, the margin of error, allows for compared to a 5-minute chart, an extremely different level of flexibility. So Hope entered it higher than I would have liked for me. I would have entered it low compared to her, but I wouldn't have actually gotten an entry based on that. So she got in and we could argue like, oh, my way's the better way. And she's like, no, my way's the better way. Well, she's in the trade. And she's been in it for weeks. Because there's that extra level of flexibility. Okay, the timing is less important. And what happens is you end up having less luck to your trading. Okay, there's a lot less. You don't have good luck. You don't have bad luck. The luck is removed, statistically speaking, from your trading results. But if you're on a small time frame and there's volatility in the market, we've all had probably 1,000 unlucky trades where the market just pops 25 pips, comes down, knocks you out, and then rallies like crazy and off it goes, but you took a loss, but you were correct in your analysis. You're like, I want to buy this dip and it's going to rally like crazy. And you buy the dip, it goes farther than you thought. You get knocked out for a loss and then pachow, off she goes. And you had the right strategy, but you bought at the right time or the wrong time. And it's really unfortunate because you ended up being correct. So it was really unlucky that it just went a little bit further than you had thought. You see? So there's now luck. Okay. And in that case, bad luck. Mostly bad luck, right? And so, I don't know. So once I think the smaller time frames are fantastic to learn price action. and to learn timing and to improve your entries. But you certainly can get unlucky because you have more of the volatility baked into your strategy, but we all know volatility is bad. Right? Now, the difference, if you look at a Sharpe ratio and a Sorrentino ratio, Sorrentino, who worked with Bill Sharpe on the Sharpe ratio, furthered the idea that there's good volatility and there's bad volatility. Right? And you'll see that in like parabolic stop and reverse studies, that there's good and there's bad. It's not quite right, it's not quite analogous, but it's close. Anywho, so if you were trading, let's say, if I was trading Bitcoin, gold, copper, wheat, I think all those things would be rallying right now. I don't think we got copper here, right? Wouldn't that be great? I don't believe we do. I don't believe we do. But yeah, crypto should rally, for example. Go to trading economics. See what's going on there. Let's see. Copper up. Wheat not doing well. I think on the long run, those things would do well, though. Lumber up 3. So we're at 4. It's hard technically, though, right? Because we know that that's resistance. We know that's resistance. We know that's support. Yeah, a little tricky. Oh, you have to click it every time. Yeah. So it's tricky for a while because we have a slowing economy, but we might have a weakening dollar, so, right? Don says, yens look beautiful, risk off bias. Yeah, but, that was planned a month ago, right? Right? Every boot camper knows that the yens are supposed to get strong by April. I've covered that every which way but loose. But like if you look at CAD yen, today is already over, right? So that's why I don't really want to dip into it. Because if you're just into that narrative now, you're just way too late. So like, here we go. Euro yen, mission accomplished. Okay? Kiwi yen, mission accomplished. Where's CAD? I guess it's here. I have to change it. Okay. And right now I zoom into, let's see, a 4-hour chart. See, mission accomplished. Right? So like they're all done. M3 to M1. Okay. M3 to M1. They're all done. Right? All those trades were planned out at the beginning of the month. Okay, CAD, pound hasn't gone as far. Okay. Which is interesting. Pound is holding up. Okay, we'll look at Kiwi. Okay. R1 through S1 all the way down to S2. That's an extreme move. Okay. So Don's like, hey, only day trades for this. No, they're all done. They're all done. It's over. If it goes further, you're taking more risk than usual. Okay? But we all know that fiscal year end in Japan is April 1st, and that money is flowing back to pay taxes. It happens every year. So, right? But what I'm saying, Don, is what supersedes day trading is swing trading, and what supersedes swing trading is position trading. So if the position for these says, like Aussie's unusual and Kiwi's unusual, but where's that euro? Okay, let's do this one. If the monthly plan was, sell in here and exit here, now that we've done it, it's over. Like all of it. All of it. So I know you're going to want to trend trade this. Okay? But what pivot points are telling you is when to fold them and walk away. Most of the time, okay? Now, Spencer said, I bought today. That's not the point of a pivot point. And I spent a lot of time thinking about this when I was writing my book. And that's why I call this area, right? It's the pivot, profit, okay, zone. Okay. The reason I named it that is after lots of thought, I didn't want people to misunderstand the point. The point is you're supposed to take profit in that gray area, not buy it. If you're buying it, you're a counter trend trader, and I've never recommended that. In fact, I poo-poo it a little bit in my book. I said, look, you're taking twice the risk for half the reward. Okay? So, right? That's right, Don. Don Pablo's like, hey, so we wait for April trades or maybe the monthly central pivot and stuff. Well, here's what I said, okay? Here's what I said last night, Don Pablo, to the day trading group. I said, I spent the weekend studying the Credit Suisse situation. I don't know how the market's going to react. It could be construed as good news or bad news, but probably volatility will show up, and volatility is bad. And then, because everybody's worried about Wednesday, all that volatility dries up on Tuesday. So people are going to be in mediocre trades out of position and then be left hanging without the volatility that put them in. Then I'm not sure I know what the policy is going to be on Wednesday. I know what's going to happen, but I don't know how Jay Powell is going to announce it. The word choices and the way that it's interpreted by the market will dictate what the market does. And I don't know what that's going to be. I had very strong opinions about what the new summary of economic projections was going to show, but now that's put in jeopardy. So now I don't know. And we have Bank of England on Thursday. So do I really need to load the boat and trade heavy now, Don? As a long-term trend trader, look, I only need to make 2% a month to hit my goals. So on Monday, Tuesday, and Wednesday of this week, should I be trading with crazy volatility potentially on Monday and crazy volatility potentially on Wednesday? And I don't know what will happen, nor do I know how the market will react. Is any of that fundamental? See, remember, fundamental analysis makes things predictable. So you're talking about strong probabilities versus weak probabilities. When you're entering a market of, I don't know what the beep is going to happen today, then why would you be investing? What I would like for you guys to do is every time you pull the trigger, you expect to make money. You're not throwing down trades to see what happens. So if you don't know what's going to happen tomorrow, and that's what I told the day trading group. Remember, I'm trying to be a role model. And what I said is, I don't know what's going to happen. I spent the whole weekend doing analysis of what's going to happen on Monday. But I'm already positioned in a way that I'm kind of neutral. And I mean by which stocks I own and which hedges I have into the market and all that. But as far as Forex, I'm looking at all the yen pairs hitting targets. I don't know what the F is going to happen with the US dollar on Wednesday because everything's changed, right? So I said to everybody, well, I ain't going to trade because I don't see an easy way to make money. I just see a risky way to make money. You know what I mean? So I'm like, you know what? I'm just going to wait and I'm going to focus on doing research. And at the end of the year, you won't know if I traded heavily in the next 3 or 4 days or I don't trade at all. Well, you would notice if I lost a lot of money, wouldn't you? So look, once again, I look at a chart like this, we hit our target, this is done. So do I day trade it down? No, the trend is over. You see what I mean? You got to start with the trend first. So if the strategic plan is March is going to be down, then that is done for March, for sure. So why don't you, as Don Pablo was saying, why don't you, now you need to start figuring out April. Okay? But to sell into a pivot profit zone is dangerous. But, you could now target the next level down. Okay? So, you could do this for sure. But understand that every pip you're trading now is riskier. So could you go for 37? Yeah. But be on heightened alert. Be on heightened alert. There's a lot of war movies, like especially World War II movies, where they approach a small village or a farmhouse or something, and they suspect a sniper. Maybe in the barn window, maybe in a window in the house, but they think there's a sniper. Because you think there's a sniper, your behavior changes, right? It's called the Hawthorne effect. You think there's a sniper. So what do? You get down, you go slowly, move quietly, you get as low as you can, try to get some eyeballs on the scene. Is there, and the scariest thing is you could spend hours there and, well, there could be nobody, or you get your helmet shot off. So the thing is, if you think the probability of risk is real, then you should change your behavior. And what I'm trying to tell you is down here, the risk of reversal is high. So you should change your behavior. Okay? But can you sell this? Well, it's already in play. You see this? You see this? This is already in play. So if you're going to short, you have to short between this 141 and 141.50. And 141.50, in my opinion, is too high. Okay? So in this 141 zone, I would already have made a decision. Am I going to sell off that 55 or not? And I'd be on a 5er or a 1er looking for my entry. Okay? And the risk of it continuing up is very significant. Okay? That's why, again, I wanted to make it clear in my book, this is an out, not an entry. I am a macroeconomic trend trader. So this is where you take your money. And what I used to tell people when they asked, well, what do you do after that? I said, become a docent at your local museum. And on a random Tuesday, when the average sucker is at work, you're leading children through a museum, trying to have them learn how to appreciate the arts. And you're contributing to society, which is a heck of a lot better than losing money or getting a day job and making somebody else rich. Okay. So for those that are interested in that kind of stuff, that's what we plan in the swing trading group. And it's particularly good for traders that do have day jobs, or you're caring for children, or you're caring for mom and dad. You love trading, you just don't have the time to day trade. I recommend swing trading and joining the swing trading group because it just requires a few hours per week. Okay. And the standard operating procedure for something like this. Okay. There's an entry. I'm not even joking. That's the one that's in my book from 12 years ago. Sell there and exit here. Can anybody confirm that that's literally what's in the book? Even though it's penny to the penny. That is in the book, right? 12 years ago. That's the best selling pivot, and that's the projected exit. I mean, that's nuts. Now, they don't always work that way, but that actually worked that way. So all you had to do, and pivots don't help with this, all you had to do was have the opinion, which we call bias, because bias is not an opinion, it's the conclusion of your research. Okay? All you had to do is have the bias that the Japanese yen was going to get strong. And of course, we all know by April 1st, for sure, the yen will be strong. Okay? How many people here learned from me the Japanese yen would be strong by April 1st at the latest? May you please add a Bitcoin payment for QuantBox? Only for the professional. If you're going to do the professional subscription, yes. Okay. So yes, yes. So a lot of people are saying yes. Okay. And we call that seasonality. Okay. So again, if you're listening to this and you're new to our community, if you don't know these things, you should. Therefore, I recommend you join FX Bootcamp. But it's $88. Whoa. Whoa, dude. Whoa. Not per month, per year. Whoa, dude. Whoa, whoa, whoa. Okay. Whoa. All right. And you'll see, I don't think this is going to do well. The issue here is dollar's weak and now peso is weak. And this is an example of, how weak people are thinking the U.S. economy is going to get. So just when dollar was strong, Mexican peso was even stronger. Now the dollar's weak and Mexican peso is even weaker. Very strange. Do you know what this chart says? Okay, once again, this is in the training course and in the book. If your bottom is S1, then the projected top for this period is R1. I'm not joking. Burns says, in some countries, $80 is a monthly income. Yeah. Well, the good news is you don't need to make 500,000 US dollars per year to live in New York City and have roommates. No, I think you could probably live in New York City without a roommate if you made 500,000 a year. Okay. Don Pablo says, it's amazing how well pivots work, but it takes time to actually grasp the weight of it all. The best way to do it is understand the math. And I go through the math somewhere in one of the courses. If you understand the math, then it's not magic. Okay? When you look at these things and you say, oh, I see what it's looking at. I see what it's trying to tell me is important. Okay? Look at last month, and I did really well on this one last month. M3 to M1. Look at this. I just showed you that on the yen pairs. This is peso. Now it says, we hung up on S1. Be careful at R1. Well, we have a quadrupled top on R1 now. But that's what the chart tells you might happen. Not it will happen, but like if that's your bottom, shields up red alert at MR1. Well, that's exactly what happened. Thank you, Pivot Points. Okay. Anyways. But if you don't have a bias, you don't know how to trade and it won't save you. See? Do you understand what I'm trying to tell you? If you don't have a fundamental bias, none of this is going to save you. The best you will ever hope for is mediocrity. Okay. So interesting about this one. Palladium's really surprised me how different it is from gold. I thought it would be just an alternative to gold. But it's quite different. I'm really, really, really surprised. But this might be a buy zone if this flips. Okay, this is really gobbledygook. Depends if what happens to the dollar. The dollar's been weak, but maybe there's a change of pace here, because what does this chart tell you? You might say bullish. No, it means over. It's done. It's gone. But what if it goes higher? Then you're trading in incredibly risky markets. And so if you make money today, don't worry about it. You'll lose it tomorrow. If you're willing to trade in risky scenarios because you think it might do something, yeah, you'll make money today and you'll lose it tomorrow and whatever. Okay? If you bought because you did, you know, let's say you bought here and you exited here, what do you do next? Well, you probably take the rest of the week off. You keep your money. You leave it behind. You got to leave it behind. All that you trade. All you do. Anywho. So I think that's that, because we really just need to trade the stock market, and that's opening in 30 minutes. I think I need to eat a second breakfast. It's been a long day, man. Holy smokes. It's only 9 o'clock in the morning. So I'll go. So lastly, let me just remind you that one of the things I'm going to do today is create the sign-up link for the quarterly outlook, which I believe will be done on Monday. And if I can't do it Monday, I will have to delay it until the Monday after non-farm payrolls, which is still early in the quarter. But I think I'd like to do it before then, if that's okay. Okay. Now, look, this takes me a long time to put this together. I'm only doing it because people said it would be helpful. So let me ask you again. Will you pay $11 for a quarterly outlook that will go over the fundamentals of April, May, and June? If you're not going to do it, I don't want to do it. One thing I don't have is time. I can do a lot of things, but I can't make more time. And you might say, hey, man, why $11? Well, there's inflation. It went from $10 to $11. Burns says, second breakfast. In some countries, people don't even eat a daily meal. Well, I guess if you're rich, you should enjoy it. What can I tell you? I don't know. I'm hungry. I'm going to have some more food. If I was in a poor country with no money, that wouldn't be an option, and I probably wouldn't worry about it. Don Pablo said, how did your quarterly one projections go? I think January I was wrong. Not fundamentally, of course, technically. Like, the stock markets rallied because they felt that the worst of the situation was over. And I didn't see it that way because I went through all the economic data and I disagreed. So, but if we're going to say, if I said fundamentally things look down and the month of January is straight up, then I could say, well, okay, I don't think I'm wrong, but yes, there was a divergence, right? But then February and March was, I think, exactly correct. So the issue was timing. No, but so January was like, oh, that's surprising. I think I had projected a third week rally. The thing is, it rallied the first week, second week, and the third week, and then kind of topped out on the fourth week. And then the February and March I thought was precise. Yeah. Spot on, as Don Pablo said. So, yeah. But remember, the quarterly outlook isn't me giving you my guesses. We went through 17 different pieces of economic data and then came to a fundamental conclusion of what was probable. Okay? So, and it worked as you would have guessed. Well, not guessed, but interpreted. So, this time it will be much more complicated. So it's going to take an extraordinary amount of thought and work to get it done in time. But I think if it's important to you, I will do it. If not, I got other things to do. I can think about it as I do other things. But obviously, to come to a bias on your own versus developing a PowerPoint presentation about all the different pieces, you're like, it's an extraordinary amount of work. So if you need it, well, that's why I'm here to serve. Right? So if it's important to you, it's important to me, and it shall be done. Yeah? Cool. So, peace on earth, may the pips be with you, may your profits be above average. Have a wonderful day. If you're my day trading group, I will see you at 4 p.m. for the New York close, the closing bell. Ding, 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 ding.